Over 140 plus countries use IFRS. The European Union, the UK, Canada, Australia, Germany, all of them adopted a single global accounting language, except the one country with the largest capital market in the world, the United States. Why? The answer isn't really about accounting. It's about money, legal risk, and who gets to control the rules. Before we get into history, let's see the fundamental difference. It make everything else make sense. IFRS is principle based. US GAAP is rule based. Sound academic, right? But let's see with an easy example. Let's suppose a company buy inventory of $1,000. After some time, the market crash. Now the inventory values go down. Now it's worth of $700 under both IFRS and US GAAP. We've written down it 700. So far, there is no difference in their treatment. Now, next year the market recovers. The value of inventory will go up. Their inventory is now worth of 900. Under IFRS, you reserve the written down back to 900. Why? Because IFRS trusts management judgment. It wants balance sheet to reflect economic reality. But under US GAAP, reversal is prohibited. Once you write it down, it stays 700 forever. GAAP doesn't trust judgment. It wants clear, hard rules, so every company follow the same path. This single example captures the philosophy. IFRS say use judgment to show what's really happening. US GAAP say here is rule, follow it. Why the world use IFRS? Now you understand the philosophy. So why did 140 plus country adopt IFRS instead of giving their own rules? So back in 1919s, if were an investor in France, you use French GAAP. Germany had German GAAP. Canada have Canadian GAAP. Every country had its own standards. Investing across the border means learning dozens of different rule books, are taking leap of faith. Imagine a Canadian investor, call him Bernie Stinson, wants to buy into a French company. To compare two companies in different countries, Bernie first has to translate two different accounting language. It's messy, costly, and risky. So a group in London said, let's build a one language that everyone can use. That was IASB group, and they created IFRS. Now Bernie can look at financial statement from Paris to Toronto, side by side, apples to apples. That's why EU, UK, Canada, Australia, Germany, and so many other adopted IFRS. Investors want to credibility, and IFRS give it to them. US already had its own system. US GAAP is set by FASB, and SEC made it mandatory for public companies back in 1930s after Great Depression. Here is the key. US GAAP was never designed for the world. It was built for the largest, most litigious capital market on the planet. The detailed rule-based standards give companies and auditors clear guidance. And the country where lawsuits are common, that clarity is protection. So while rest of world moved towards a single global language, the US already had a system that worked perfectly for its own market. Why the US not using IFRS? It's not because IFRS is inferior, but because the economic and politics doesn't add up. Here is the reasons. 1. The existing standards are already trusted. The US capital market is the deepest and most liquid in the world. Investors already trust on US GAAP. The main reason other countries switch is to gain trust of investors, but US already have this. Second, cost would be very high. Switching to US GAAP to IFRS, this will cost tons of $1 billion. Thousands of public companies would have to restate financials, retain staff, overall system. For a system that already works well, that price tag is non-starter. Third, legal protection. Remember that inventory example? GAAP give you a hard rule.
In lawsuit, you can point out the rule and say I follow it. Principle based IFRS leave you room for judgment, and in US legal environment, judgment can be expensive. Fourth, consistency for investor. When every US company follow the same detailed rules, investor can compare them easily. Moving to principle based system would introduce more variability, making those comparison harder. Fifth, control over standard setting. This is unspoken one. IFRS is set by international board where US has limited influence. The US prefer keep standard setting at home with FASB accountable to American stakeholder. Which of reasons surprise you most? Drop of comments. So it's not that IFRS is bad. It's that the US already has a system that's trusted, deeply work well, and incredibly expensive to replace. The decision is about economics and legal risk, not accounting quality. Understanding the why standard differs is matter if you work in global finance valuations or cross-border investing. It's tell you how company actually report their numbers. Which of reasons surprise you most? Drop off comments.
If you found useful the video, then please like and subscribe to the channel.